Welcome to Small Biz Life, episode 135. How to make next year's taxes suck less.
It's about time.
And we understand that for a lot of you, tax season sucks. And so I like doing this episode. I know like a lot of you are like, this is too late, but here's what I'm thinking. I'm thinking next year. Okay. And I like doing this at the end of tax season because all of my frustrations and all of my clients' frustrations are fresh in my mind right now. And so I want you to start thinking about how you can make 2018 better.
And just as a warning, if you're one of those people who actually likes to go in and get their taxes together this week, you're probably going to have some issues that you're going to run into with your accountant, and good luck.
Yeah. And that's the thing. It's like, if you're listening and you're planning to go on extension, or, you're trying to get your taxes done at the last minute, then this might actually be helpful for you. But I want you to start thinking about how you can do things different for 2018. So we're going to talk about 4 things today that you can do to help make next year's taxes suck less. Okay, so the first one is know what to expect. I think a lot of times people don't even know what information is supposed to come in for them, right? So like a lot of times, I'll know because I have a record in my system of what accounts we dealt with last year. So I'll know what accounts you got interest off of last year, what banks that you dealt with that paid you interest, your mortgage company. I'll typically have a note of who that is, your brokerage account companies. And so like if I see that an account is missing, I will tell my client, hey, what about this account? And most of the time the client will go, oh yeah, I forgot about that one. Yeah. And they'll have to get me the statement. So what I have for us is I actually have a document, and you can do this like in a Word document, Excel document, whatever you want to do. But I have a list of all of our accounts and where they are. And actually one thing that I did this year, our bank will actually let us connect all of our accounts into their account, even though they don't own the account. And so when I log into my bank, I can see the balances for all of our accounts, including our investments and, our credit card accounts, which is really nice. It's all in one spot. I would recommend that you put something like this together for yourself, because then you'll know, first of all, if something ever happens to you, it's a great thing for your spouse or your family to know that this exists. But for tax purposes, it's a really good idea to have something like this. So, like, okay, I have a mortgage. Oh wait, our mortgage company changed last year. We refinanced, or maybe your mortgage company was sold to somebody else. I had a lot of that happen last year with my clients. And so when I got their interest statement, it didn't look right. Like it didn't look like it was enough interest. And so I had to go back to my clients and they'd be like, oh yeah, I forgot. Yeah, our mortgage got sold. Yeah. And the problem is, like, if you don't have an accountant who knows your stuff really well, your account might completely blow past that, and not really recognize it.
And really, most accountants, it's not really their job to know your stuff. Some accountants, like Kristin, does that, but it's the types of clients she works with is why she does that, and one of the reasons why she charges what she does, because she actually can remember this stuff. Yeah, it's amazing. She can even remember our stuff, which blows my mind. I'm the free spirit for all you Dave Ramsey people out there. But the thing that is amazing. Thank you, Boo. The thing that is amazing is that most people don't know just the stuff that they need to get to their accountant every year. For me, sitting on the sidelines, Kristin's like, oh, I'm creating another email now and I have to get some more information. It's understandable in a way, because as individuals, taxes in our business. That's why we're hiring someone to do it for us. But for other individuals, it's like, if you can put together something to help remind you of what you need, it can save yourself some time, speed up the process to have your taxes done, and then you know whether you owe money or whether you're getting money back sooner rather than later, because especially if you owe, it's really tough to figure that out on the 14th.
Right. And it's interesting because one thing that kind of blows my mind the longer I've done this, Jeff and I have always had our money consolidated. So all of our accounts are joint accounts except for my CPA firm, because I own that by myself. And so we have access, like everybody has access to all the money. And it kind of amazes me when you have couples that they have their money separate, but one person handles the taxes. And so it's interesting because, it's like I'll work with clients where, I'm working with either the husband or the wife to try to get the taxes done. And they're like, oh, well, I've got to go ask my husband that, or let me go check with his accounts, or, oh, I don't have access to that. That's her stuff. And it makes the taxes really difficult because they don't have this master list. And so I'd really encourage that you have a master list of all of your accounts, bank accounts, brokerage accounts, credit card accounts. If you have an HSA, a health savings account, make sure that that's on the list. And you can just use that kind of as a guideline at tax time to go, okay, should I be getting something from this company? Oh, yeah, I have a savings account with them. I earned interest. I need to go get that statement. And it's just kind of a good thing to kind of go through and check everything off to make sure that you've given everything to your accountant.
Well, especially too, it's like even before Chris and I were together, I knew where all my 1099s were coming from because I want to get my taxes done as quick as possible. So, if I had multiple W-2s that year, or, knowing where the 1099s come from. So as you start, when you reach the beginning of February, if you're missing something, you can start harassing people to get that information, because, usually it's because it's an expectation of getting money, but it's actually worse to learn that you're paying money at the last minute. So, because there's no extension for paying money.
Right. And that's the thing. And I would recommend that, I'm going to kind of I'm going to shift things around a little bit. Number 2, update everything at least monthly. And the reason that I say that is because, if you have this list going that these are all my accounts, and then if you change jobs in a month or you open a new business, add that to the list so that when tax time comes around, you have this whole list of stuff. And, I think there's this misconception that if you're a business owner, you can't file your taxes until you get all your 1099s. That is not true. The IRS says that you have to record all of your income no matter where it comes from. And so even if somebody doesn't send you a 1099, you're still supposed to report that income. That's why having something like QuickBooks Online or Wave, or Xero is a really good thing to have, because it's going to track all your income for you as the money's coming in. But it's like, oh, people are like, I can't get you my stuff yet because I'm waiting for this 1099. No, you really don't. You don't need the 1099. You don't need it.
You shouldn't.
Okay. Right. You shouldn't. Hopefully you don't. Okay. So, but if you're updating everything on a regular basis, the biggest thing that was slowing down tax season was that clients weren't ready because they didn't have their books updated. They didn't have their home office information updated. They didn't have the stuff. Right. And so they're trying to compile records at the last minute. And for our HQ members, which if you're not a member of HQ, you should totally check it out, because for $49 a month, you get to ask Jeff and I whatever questions you have. So that's like the best deal in town, right? For $49 a month to be able to ask an IT professional and a CPA whatever questions you have in our private Facebook group whenever you want. It's a pretty sweet deal. You can go to smallbizlife.com/HQ to check that out. But for the HQ members, we're going to be giving you guys the monthly summary worksheet that I use to do our taxes. So
now, is this personal or business?
This is the personal side. So all of our business stuff is in QuickBooks. For our personal stuff, like we have a home office. So I've got to track all our utilities, real estate taxes, supplies, repairs and maintenance. So I've got this whole spreadsheet that I use. I also put our donations on there. I put tax payments on there. So it's a great little spreadsheet that I just use to keep us organized. So that way every month I update that. And then at tax time, like we're ready to go. You know, it's not something that I have to like recreate the wheel.
Yeah.
So HQ members, that's going to be up in the Facebook group. And we're also going to put that in your members area for you so that you've got it. But if you keep up with everything on a monthly basis, and it's, you know, it's funny too, it's even like, you know, if you're doing a mileage log, you should be doing your mileage log on a monthly basis. Now, the easy way to do that is to get something like Mile IQ, and then you don't have to worry about keeping your mileage log updated. Because mine, I get little alerts on my phone. I got one today that said, "Hey, you've got, you know, you had 2 drives. Do you want to classify those?" And I did. So, you know, I already have my mileage up to date for next year, and it's pretty awesome. So, you know, but when you get in the habit of doing that, it's a 15-minute thing or a 20-minute thing a month versus like days.
Yeah.
And if any of you did the days, right, of accounting, we're like, oh my God, it's so much to do. See, I do mine in 15-minute chunks. You guys are trying to do days worth of accounting. I don't even want to do days worth of accounting, and this is something I do. So, you know, and it's funny because like Jeff, we've taught Jeff how to use QuickBooks. And so he's gone through for some of the clients, like updating their stuff for the year. And he's like, I don't understand. Like doing a year's worth of this stuff is terrible. I'm like, I know, it's awful. You know, so I'd really recommend, you know, that you get in the habit. You know, it's still early in the year. Okay. So at this point, if you're listening to the show when it comes out, you've got 3 months that you could do and then be caught up for the year.
Yep.
That is way better than where you probably were last year. Hell, some of you, I think, are putting together last year's stuff right now.
You know, the way I like to think about it, you know, it's kind of like the dishwasher, you know. It's like if you go through and kind of add stuff in as it's being generated or after you've finished using a dish, you don't spend a lot of time loading the dishwasher. But, you know, if you go in once a day or once every couple of days and unload the dishwasher and then load it up, you spend a lot more time overall doing dishes. And from what I saw in a recent study, no one likes doing dishes.
That's right. Apparently dishes are ruining marriages all across the country. Okay, so we said the first thing is, you know what to expect, right? So have a list of all of your accounts. And if you don't know what to expect, then go talk to your accountant and say, you know, what kind of documents should I be looking for next year? Update everything at least monthly. That's number 2. Number 3, and I think for a lot of you, you're like, the reason that I'm not updating on a regular basis is because my bookkeeping is so complicated. So the third thing you need to do is you need to simplify your bookkeeping. Now, you know, some people that I talk to, you know, you guys have businesses that are doing less than $100,000 a year in sales, and you've got 14 credit cards. Okay. That is not simplifying your bookkeeping.
No.
Okay. You've like, get it down to, you know, I know a lot of people are really into this profit first system. And I think that it is a great concept. However, the execution and having 6, 7, 8 bank accounts is really tough for most small businesses.
You need a full-time employee to manage your profit first.
Right, exactly. So I love the idea of paying yourself first, thinking about profit first. That is awesome. We need to do that as small business owners. Love that. I don't like the complexity of it though. You need to have a bank account, you know, a checking account. You need to have maybe a savings account if you want to put tax money aside, and maybe a credit card, you know. And I recommend, like, if you have a checking account, stop writing checks. Because checks are, first of all, they slow you down. Okay. And they slow down your bookkeeping because when you write checks, those don't come through, you know, your bank feed with a lot of information. It's typically the check number and the amount. And then you've got to figure out, who did I write that check to, you know, and you've got to put in a lot of information. So I pay everything that I possibly can for our business on automatic payment. Because it's just easier. I have everything flow through one debit card. So it just all flows through automatically into our account. If I have to pay something with a check, I actually use the bank's online bill pay, because a lot of times if I'm paying a larger vendor, it will be paid electronically and the data will still come through almost as if I had done it through my debit card. Okay. So
For
that's one
most
thing.
banks,
Go ahead.
I was just going to say, for most banks, it's actually free at this point. But even if you're paying like $1 transaction fee, once again, if it takes you 5 minutes of time or 10 or 15 minutes to go back and figure out who this check went to and to put in the information you need into QuickBooks, is it worth $1? You know, especially if it's like one check a month. You know, granted, if this huge bucket of work you have to do, but you know, trust me, Kristin says I do write-up work for her, and when there's lots of checks involved, it's like pulling hair out. And some people do it; it is tradition. Try to get past the tradition.
Well, and I think some people think that, like, you know, when the IRS says they need a receipt or they need a canceled check, you know, they think that like they have to write a check. But if it shows up on your bank statement, you know, and it's clearly your electric bill, then the IRS is not going to question that. They might question which account you paid. Like, is it your business account or your personal account? But they would do that if you wrote a check. Yeah. So, you know, I think a lot of people think like, oh, a debit card is not good enough or a credit card receipt is not good enough. I have to pay things with a check. Other people, I think, you know, when I talk to some people, like, well, I don't like the concept of auto pay because, you know, they're just going to take whatever money they want out of my account. So most auto pays are set up that they're not going to take it out until the day that the bill is due. And so if you get your bill and something is wrong, you know, you have the opportunity to fix it with the company before they take the money out of your account. And if you get into a dispute with them, you can remove the auto pay before it comes out, because the one thing with auto pay is the day that you cancel it, they can no longer take money out of your account because they don't have authorization to do that. So I think a lot of people think that like they get stuck if they ever sign up for auto pay and you don't. So, you know, you can kind of keep that in mind. The other thing I'd recommend, and people fight me on this a lot until they do it, and then it's the greatest thing ever. Make it easy for your clients to pay you electronically. And I know a lot of people who they don't want to do this because they don't want to pay the credit card fees. Okay. Credit card fees are a cost of doing business. Most people understand, you know, that prices are a little bit higher for the convenience of using credit cards. Now, in most states, you can't charge a higher fee if somebody pays you with a credit card. However, in most states, and you've got to check on your state, in most states, you can give a discount if people pay cash or with a check. So look into that. You can't charge a higher fee for credit cards. You can't pass on the credit card fees to people, but you can give an incentive to pay without a credit card. Yeah.
I just want to step in there. You can just not target it at people who pay with credit card. So the thing is, you can, you know, if you average $1 a transaction on credit card fees over all of your clients, you can charge all of them one more dollar. And that's just a number I made up.
Well, and, you know, and it's interesting because what I found, because I was really resistant to this when I first started with my accounting firm, what I found is that the days collected, which means how long it took from the time I sent the bill until the time I got paid, before I was accepting electronic payment, my average was 30 days. After about after the first tax season of accepting electronic payments, my days collected went to 4. That means I got paid on average 26 days sooner than I did before. And for me, you know, and I know for like a lot of your businesses, getting your money 26 days earlier would make a huge difference in your cash flow. And so for me, paying those fees was worth it to get the cash sooner. You know, so I want you to think about this in your own business. And, you know, I understand like if you're a roofing contractor or a landscaper, this could potentially be a lot of money. What I would encourage you to do is I would encourage you to implement a system where you are emailing out your bills right? Which now you're saving the money for paper, for envelopes, for stamps. Implement a system like that. And then also at the same time, implement an electronic payment system. In QuickBooks, it's great because it's all integrated in. And so if I send a client a bill, they can click a button, they can pay that bill. And then QuickBooks automatically records the payment. It records the fee. It puts it into my bank account. It's a wonderful thing. So for me too, that's less time that I'm spending in QuickBooks in order to process all these checks. And so part of the fee for me is recovering that time, right? Where I don't have that time anymore that I have to spend on that function. So I think for me, that's huge. So, you know, and the other thing too is that we were actually having a discussion about this in HQ on one of our live calls. And I said, you know, if I have to get up in order to get a credit card or write a check, I may not even, you know, if it's a bill, it's going to take me longer to pay you. And if it's something I want to buy and I don't have the option to pay through Visa checkout or pay through PayPal or pay through some other way that's like connected through my phone, and I have to go get my wallet, it's less likely I'm going to pay you. It's less like I'm going to buy something from you. And so, you know, it may affect your actual sales output. And one of the things that we're going to be looking at this summer is implementing PayPal for HQ payments, because that's something that's available to us now. And so we're looking at what are other ways that people could pay us, you know, for our products.
The other thing I want to say too is if your business struggles with collections, and typically that happens where it's a little bit bigger cost. So you usually do like a net 30 or 60 or 90, which I don't know why you'd ever go over 30. The thing to keep in mind too is the easier you make it to pay you, the more likely they are to pay you right away. And I know that once you go over that 30 days from the time the bill was originally due, it becomes much harder to collect on that. So you might be creating harder work on yourself just because this is the way that you do it and it seems fair to you. The thing is, especially if you make it easy for them to do it a different way, most people won't wait to the last moment, and you're going to have some who still will wait the 30 days, but most people will pay you right off the bat as soon as they check the email. And the good thing is, I know with QuickBooks, you can actually go in and you'll know if they've actually even checked it, if they've seen it or not.
Yeah, that is kind of one of the nice things about QuickBooks. And it's funny because you don't really think about that. But I can actually go into the system and I can see whether or not somebody's viewed their bill. So if somebody's like, oh, I didn't get that bill, I'm like, oh, it's funny because, you know, according to my system, it says that you opened it on this day. Are you sure maybe somebody else opened it? You know, so it's kind of a way for people to go, oh crap, she knows that I saw it. Okay. And it totally helps with collections. It does. So that, and if people are like, oh, well, I'll send you a check next week. You know, I'm like, you know what, I'll just send you another link so that you can pay me right online. And you just pay me today. The other nice thing with that too, and this is good to know, like if you're paying people. So if you have the option to pay somebody with a credit card or a debit card, if you use that option, then anything that gets processed through a credit card company, you do not have to send a 1099 to that person because the credit card company will account for that in the 1099 that they send. And so I always encourage my business clients, I'm like, look, if you pay me electronically, you don't have to send me a 1099. And they go, oh, okay, I like that. That's a good idea. So that's kind of another way to get businesses to pay you that way because they hate sending out 1099s. So
if you're a service provider where you go over that threshold, it's maybe a great little selling tip too.
Yeah, absolutely. So that's kind of a way that I'll sell that to some of my clients. Okay, so the last one, and this is my biggest pet peeve, summarize. I think a lot of people think that because they need to have receipts for things, that their accountant needs to have receipts for things. That is not the case. We only need totals to do your taxes. And if you have an accountant that's like insistent on seeing all your receipts, I would kind of question that because it's not your accountant's job to audit you. So, it's funny because I have like some clients that will give me like 3 inches of information in a folder when I really only need like 20 pages of information, because they'll give me like all of their electric bills for their home office, and they'll give me all their gas bills for their home office. And, they'll give me all of the donation letters for all the donations they made. All I need totals. So how much did you spend on utilities for your home office? How much did you spend on repairs for your home office? If you've got a rental property, same type of thing. But I think a lot of people are like, oh, I need to give you all my receipts. And that's not the case. And if you think you're paying a lot to get your taxes done, it may be because your accountant either A, has to go through a whole bunch of paperwork that they don't really need to go through and are charging you to go through. Or it's because you're not adding things up and your accountant is charging you to like add things.
Yeah.
And at our rates, we're really expensive adding machines. It's just not something that you want to pay for. And again,
bookkeeper would be much more cost effective.
Right. And the thing is, what I find is a lot of times, if a client is like, it seemed like my bill was kind of high. It's typically because like I'm adding up numbers, and I'm more than willing to sit down with a client and say, okay, next year, this is what I need from you. Don't give me this, don't give me that. And just here's what I actually need. And I'll also help them put together that what to expect list as well, at the same time. So, so summarize. Okay. And one thing that's really good to do is like, if you don't understand your tax return, ask your accountant to go through it with you. Cause like I have some of my clients that they actually, they'll take like the Schedule C from last year from their taxes, and they'll scribble out the old numbers and they'll write in the new ones, because that just helps them remember, oh yeah, this is the stuff that I need to give her.
It
now,
verifies they have everything. Yeah.
Right. Now, if you have QuickBooks, you can just print out a report, and it's really easy. But if for some reason you don't, that's a really good way to make sure you don't miss anything.
And most people don't do that for personal anyway, so they don't have QuickBooks for personal. So, so the thing is, and the thing I like, is like if you have an Excel sheet or a Google sheet, or you use the old copy of your return, you just have like a little list that you just have to fill out. It's like school. And if you have trouble remembering what it is, just record yourself doing it in a video and, and save it for next year.
Yeah, absolutely. So, this is one of the things that we try to do around here is we try to help you, simplify and get the crap out of your life and your business. And this is one area where there's too much crap in this area, because people are they're doing too much, and I think that's one thing. If you don't know what you can and cannot deduct on your taxes, and you're just kind of like throwing stuff in a folder because you think maybe it's deductible, then you need to sit down with somebody, because you are doing too much work. Yeah. I have clients that, they will give me, because they know that their homeowner's insurance is deductible if they have a home office. So they're giving me their car insurance, they're giving me their car registration, they're giving me their license fees, they're giving me all of this stuff that we don't necessarily need. And so if you don't know what you can and cannot deduct, it might be a good idea to sit down with somebody and say, okay, here's last year's tax return. Can we just kind of go through this? If you have any ideas for additional things I might be able to deduct, but, at least wrap your head and get a good list of things so that you're not spending time pulling together numbers that your accountant doesn't need.
Yeah. And I would say don't pull your hair out on it, right? So it's like, get the list down of everything that you think that you need. And the next year, if you get any 1099s that you didn't realize, you can add them to the list. When the accountant sends you an email, ask you for something, just add it to your list, because it'll save you so much time the following year and work that you don't have to do.
Yeah, because that's the one thing that I've noticed is that I'm asking the same questions every year. And so if you've got that what to expect list, and you get, the items from your accountant that your accountant needs, add that stuff in. It's funny, like every year it's like, I need homeowners insurance from people who have home offices. And I need car taxes, for people who are itemizing. Those are the big things I see like over and over and over again that people forget. So I hope this was helpful for you. I hope that you start thinking about, how you can simplify your taxes for next year. If you have any questions about this, feel free to reach out. After tax season's over, I'm going to be updating my electronic schedule, and I will actually have some time that people can book with me. So if this is something that you're interested in doing, reach out to us. You can send an email to support@smallbiz.life.com, and we'll make sure to send out my schedule once tax season's over. So thank you so much, and we'll see you next time.